Welcome back to another episode of Stock Talk. If you guys are new to my channel, my name is Julie, so welcome. Today I want to give you 5 dividend stocks that look like they are close to bottoming out. Now, of course, it doesn't mean that can't go any lower, but if you guys are looking for some good quality dividend stocks, then I want to bring these to your attention so that you can start a watch list, possibly even start a small position, and if they do drop, add to your position so that you can build a nice portfolio that you can hold for the long term. So the first stock I want to talk to you guys about is 3M. 3M was founded in 1902 and is a Minnesota-based company that manufactures and sells industrial safety and consumer products worldwide. So let me actually pull up the website and show you some of the products that they sell. So this way you guys can get a good idea of what 3M's actually sells. So we can see some of the consumer products are Nextcare, Post-it, Scotch tape, Scotch Brite. So these are just some of the products that 3M sells. So now let's take a look at the chart. We can see I'm on the 3-year chart, and if I were to look closer on the 3-year chart, my guess is that it might fall down to 149 because there was previous support. If we look back, we have a spot over here. This was in July of 2019 and then also in July of 2020 where it found its support, and then we can see that it made a move upward. If I were to put this on my watch list, I would probably watch out somewhere around 147, 146 before I were to enter the stock, but it doesn't mean it's actually going to get that low, or it could even get lower. So if you guys wanted to do some more research on this company, and this is a company that you guys are interested in, then you could even start a position now. Considering that it's still down from recent highs of 208, we're sitting at 159 right now, and they do pay an annual dividend yield of 3.65, and the sector average is actually only 1.34, so it's much higher than the sector average. Additionally, the average price target is around 180. That gives you a 13% upside potential. Now, there is a hold rating on this company right now, and again, it might be because they're thinking it has a little bit more downside. So again, just put this on your watch list if this is a stock that you guys are interested in. Now, I also want to take a look at the valuation of the company. So let me bring this over. So if we take a look at the valuation, we can see that the PE non-GAAP is a B because it's sitting at 15.78 with the sector median being 20.08. So it's well below the sector median. And typically you want to look for a PE of under 25. So that's typically a really good PE ratio. So again, we're sitting at 15.78. So this checks off a lot of boxes that I'm looking for when I'm selecting stocks. My next list on the stock is actually eBay. And eBay is one of the world's largest online marketplaces, which connects buyers and sellers worldwide. Now, this company is actually operating in 190 countries. And then let's take a look at the chart. So we can see it's currently sitting on the 100-day moving average. And again, I am looking at the 3-year chart. I have said in my previous videos, because we had such a incredible bull run over the last 2 years, that I prefer to look at a wider time frame just to get a better idea of where the stock might be heading. So again, we're looking at the 3-year chart and we are sitting on the 100-day moving average. So this could be a nice entry point. Now, of course, again, doesn't mean it's not going to fall any further. And if we take a look, there's not really a spot where we find resistance other than the 300-day moving average would be around $42. If you wanted to, you could start a starter position on the 100-day moving average. And then if it drops down to the 200 or 300-day moving average, you could add to this position. Now, eBay has a moderate buy rating with an average price target of $78, and that gives you roughly 34% upside potential. The yield is 1.12, which is a little bit lower than the sector average of 1.5. But again, you have an upside potential of 34%, being that the average price target is $78. Now, eBay has not been paying dividends as long as the other stocks. So if we go actually on Yahoo Finance, we can see if we go under the historical data and select the dividends for the last 5 years. It's only been paying dividends since 2019, but it has gradually increased their dividend payout. So that's quite nice. Then additionally, let's take a look at the valuation of the company. So out of all the companies, eBay does have the lowest valuation. So the PE ratio is actually trading currently higher than the sector median, which is 12.93. but we are still under 25. We're sitting at 15, so that is still okay, even though it's a little bit on the high end. But again, that's why I said perhaps the stock, watch if the stock even drops lower to maybe the 200-day moving average. The next stock on my list that I have for you guys today is Quest Diagnostics. And Quest Diagnostics engages in the provision for diagnostic testing, information, and services, and it operates through the diagnostic information services and all other segments. And it was founded in 1967 in New Jersey. Now, looking at the 3-year chart, we can see that we are sitting almost, not quite, on the 100-day moving average. And if we take a look at the left, we can see that previous resistance was somewhere around 130 to 131. So if this can find support right here, then this could be our new support line. And then we would see an upward trend. Now, Quest Diagnostics has a moderate buy rating with an average price target of 154, which leaves you with roughly 16% to the upside, and pays a dividend yield of 1.84, which the sector average is 1.36. And taking a look at the evaluation, we can see it has a evaluation. It's sitting at 9.4 for their PE, and the sector medium is 22.20. So this is really good, actually. Additionally, if we take a look at the history of the dividend payout, we can see for the last 5 years that it actually has increased the dividend payout as well. So that's quite nice. So currently it's paying 62 cents per dividend per quarter. So the fourth company I want to talk to you guys about is Cummins. Cummins was founded in 1919 and is based in India. And it actually designs, manufactures, and markets diesel and natural gas engines. Looking at the 3-year chart, let me pull that up for you real quick. We can see that Cummins is sitting on the 100-day moving average, and it looks like it's finding support over here. And analysts are giving the stock a moderate buy rating, and it has an annual yield of 2.53, with the sector average is only 1.34. Additionally, it has an average price target of $266, so that gives you a 20% upside potential from here. And I also want to take a look at the evaluation. So if I pull this over, we can see we have a grade of B+. It's sitting at 15.3 with the sector median sitting at 20.08. So it has a great PE ratio right now. Then the last stock on my list today is going to be Stanley Black & Decker, and their manufacturer and provide tools, power tools, hand tools, and any related accessories, which are sold in all kinds of home goods stores. So Stanley Black & Decker is currently sitting on the 200-day moving average, so that is even offering us a deeper discount. Now again, looking over to the left, we can see that we have previous resistance somewhere around 154, so there's a possibility that the stock could drop even a little bit further. Even if it drops down to the 300-day moving average at 150, we are not that far below, so that is, I think, a really good reward to risk ratio, being that the average price target is 209, and that gives you a 28% upside potential. Now, the analysts are giving the stock also a moderate buy, and it has an annual yield of 1.76, and the sector average is 1.5. And let me take a look at the evaluation for you guys, so you guys can see that as well. We can see it has also a B+ grade. It's sitting currently at 14.8, and the medium sector is 20.08. So great evaluation. Additionally, if we take a look at the overall dividend payout, and let me pull it up for you guys real quick. And then we can also see, and again, I'm at Yahoo Finance. If I go to dividends to the last 5 years, we can see it also has been paying a steady increase over the last 5 years. So it went from 58 cents to now 79 cents. So these are all great factors when you're looking for dividend stocks. You want to make sure the PE ratio is decent, actually better than the average. Then you want to see that you have some nice upside potential with the stock itself, additionally a good dividend yield, and you also want to see a dividend payout increase. All right, as always, this is not financial advice, so be sure that you guys do your own research, and if you guys got anything out of this video, please be sure to hit that like button and consider subscribing to my channel. I greatly appreciate that, and don't forget to share this video with your friends as well. All right, I'll see you guys in the next video. Until then, bye-bye.